Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is October 31st. Happy Thanksgiving to everyone out there. We are going to take a look at one out of the consumer discretionary sector, and maybe it's fitting today that it's Halloween because we're going to take a look at a makeup company, Estee Lauder companies. Now, before we get too far in the video, if you could do me a big favor, hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Hit that subscribe button down below. Make sure you join us. I know there's a lot of you out there who watch the channel who have not hit that subscribe button. Whenever I look at the my YouTube page, and shows me all the metrics there. There's a lot of you out there watching the channel, so it leads me to believe you enjoy the channel that just are not subscribed. So help me out, help me grow the channel. Hit that subscribe button. It really does help out. Hit the notification bell so you're notified whenever we put out any new content. Watch time is also one that the YouTube algorithms looks at. So if you could watch the videos to the end, that would be greatly appreciated. And last, a little update on the channel. The channel has been able to be monetized. We meet some criteria there, or met some criteria on the channel. Over 1,000 subscribers, been there for a while. Finally hit the watch time needed to monetize the channel, which means basically you might see some ads on the videos now. If you watch those ads, that's how creators like me that create content on YouTube get paid, through the advertisement. There's also a thanks button. If you hit the little 3 dots next to the notification tab, you'd see the thanks button. I think you can make donations $2, $5, $10, maybe even $20 there. Again, you know, not pushing for that, but if you can, that'd be great. That would help out the channel. If you can't, that's fine too. Doing the other stuff, that thumbs up, the subscribe button, the notification bell, and dropping a comment down below really help as well. And really do appreciate all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the vested interest stock screener. This is the criteria we're going to go through in the video. It's also how I look at a company on a high level. Thousands of companies in the stock market. This is a quick way for me to go through and see if I'm interested in adding the company to my watch list. And then if it makes it onto my watch list, I do more of a deep dive into the financials of the company, look at their balance sheet, their income statement. I'm looking at stuff like debt to equity ratios. Are their margins expanding? Is their revenue expanding? You know, are they paying down debt? Are they buying back shares? What's their price to book compared to other companies in a similar sector? A lot of good information there. And if you don't want to do that type of research and do that kind of deep dive into companies, you should not be buying individual stocks, and you should stick to index fund and ETFs. The one that Warren Buffett, which he's way smarter than I am, so I'm going to use his suggestion. Warren Buffett would recommend the S&P 500, so an ETF or an index fund that tracks the S&P 500, like VOO, VOO, Vanguard's S&P 500, SPY, SPY. I believe he actually has both of those in his portfolio, if I remember correctly. The Berkshire Hathaway one, you could look up his 13F and see that. And there are several others out there that track the overall S&P market, and it doesn't have to be an ETF. It could be an index fund as well. ETFs are just a little easier to trade in and out of than index funds are. So that would be my recommendation if you don't want to do that type of deep dive. And then you could be investing into the S&P 500 while you learn how to research stocks. Nothing wrong with that. And now back to Estee Lauder. Check them out at their homepage, www.esteelauder.com. That's www.esteelauder.com. That is their homepage where I pulled this information from. Founded in 1946, this technologically advanced, I don't know how technologically advanced a makeup company can be, but apparently that's how they want to report them. Technologically advanced, innovative company has gained a worldwide reputation for elegance, luxury, and superior quality. Our products come with a promise to uphold the finest standards of excellence. Through extensive research and stringent product evaluation, we are pleased to bring you skincare, makeup, and fragrance products that are both gentle and highly effective. And that's their bread and butter, right? They are a makeup supplier, right? You've got repair serum. I don't even know what half this stuff is. Moisture, I'm sure my wife does. Moisturizers, and my daughter's eye cream and treatment, cleanser and makeup remover. I mean, I know what some of them it is. Toner and treatment lotion, masks and targeted treatments, sets and gifts, foundations, concealer, blush. There's a bunch more on there. If you were to go to their homepage, this scrolls down. There's another 20 that you don't see here. Lipstick, powder, and compacts. You can see some of them over here. Revitalizing Supreme Night Power Bounce Cream Moisturizer, Advanced Night Repair Serum. I mean, they just have a whole product line that, again, if you are a woman, I'm sure you're well aware of the product lines that they have. If you're a man who's ever bought anything for your wife in this space, you probably are aware who Estee Lauder is. Now, the reason we are taking a look at them down at 20.88%, huge drop on the day. We are talking about Estee Lauder Companies, ticker EL, out of the consumer discretionary sector. Closed out the day at $68.95. Looks like they might be down a little more in the after hours. 52-week range as low as $63.68, as high as $159.75. So they are closer to their 52-week low than their 52-week high, and they are within 15% of a 52-week low there currently with that 20% drop. Market cap of $24.751 billion, a beta of 1. So they're right in line with the overall market as far as volatility, beta being the volatility of the market, 1 being the market. PE ratio, price to earnings, is very high, $63.84 per share. Seems very high for a company like this, probably part of the reason for the big drop. Maybe further drops to come, who knows. Earnings per share, EPS, is $1.08 per share. Earnings date was today, so I'm assuming that something in their earnings report is the reason for this huge drop. You might want to check that out. Forward dividend, $2.64 on the year. They are quarterly payers, so divide by 4, though we will see that here in a little bit. Nice starting dividend yield of 3.03%. Ex-dividend date was August 30th. Looks like they paid out on September 16th, so if you were to buy them now, you would be in line for their next payout, though you're going to have to wait a couple months. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $103.66 per share. So they see it going back up from here as far as price appreciation, but not quite getting back to its 52-week low, or 52-week high, I mean. Jumping over to the right, we're going to take a look and see if this one is potentially undervalued according to dividend yield theory. To do that, we look at their 5-year dividend yield average of 1.16%. We compare it to the current 3.03%, or over here where it says forward annual dividend yield 3.03%. And since it is higher and much higher, over twice as high, that speaks to some potential undervaluation, at least according to dividend yield theory. Now, I like under 75% for payout ratio. This is crazy high, 244.44%. That's way too high. Again, maybe part of the reason for the drop here, and definitely screams to me that the dividend is in danger of a cut, right? 244% dividend, that's just too high. Under 75% is where I like to be. So this is just crazy high. Now, dropping down to free cash flow, I like growing free cash flow. Is typically if a company has growing free cash flow, they have growing dividends to match. So going back 2021 here, you can see $2.9 billion in free cash flow, down in 2022 to $2 billion. 2023 further dropped to $1.5 billion. 2024 to $1.4. So they're going the wrong direction. Now, repurchase of capital shares, they are repurchasing their shares. So 2021, $733 million. Now, it looks like a drop in free cash flow in 2022, but that is more than accounted for by the increase in the repurchase of shares. $2.3 billion in repurchase of shares here. So even though they went from $2.9 billion to $2 billion, that's more than accounted for here. Now, it is not accounted for in 2023 because they decreased their repurchase of shares to $271 million. And their free cash flow is down to $1.5 billion. And even further, it's not accounted for in 2024. They decreased their purchase of shares down to $35 million, and their free cash flow went down to $1.4 billion. So from 2022 on, they have seen a decline, a decrease in free cash flow. That is not what we want to see. They are going in the wrong direction. And again, probably part of the reason for the huge drop. Now, jumping over to stockanalysis.com, this is another source I go to for information. You pick any sources that you like. I recommend more than one source, 2, if not 3, so you can make sure the information you're getting is accurate and up to date. They have 20 analysts that have taken a look at this. They call it a consensus hold. Low estimate of $72, which would represent a 4.68% increase from where it currently sits. Currently sits lower than their lowest estimate. Average estimate of $112.35, pretty close to what we saw with Yahoo Finance on the previous page. That would represent a 63.35% increase. And if it happened to hit their high of $180, that would represent a 161.7% increase. All the while, you could collect that 3% dividend, well, if they don't cut it. Now, jumping into statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting its capital back into itself. We're going to look at return on equity, ROE. I like 10% or better. Pretty low at 3.86%, so it doesn't meet the 10% threshold I'm looking for there. Return on invested capital at 6.38% does not meet the 10% I'm looking for there either. EPS growth over the next 5 years, I like 5% or better. Smoking high, 52.26%. If they do meet this, wow, their earnings per share is going to skyrocket. And their revenue growth forecast is at 8.29%, which is a very good number. Now, going through their dividend history, so we can wrap this one up here. They are a quarterly payer. Payout ratio, again, 244.44%. That's way too high. They do not have any dividend growth. It says growth of 3 years, but they haven't really been growing it. We'll see that here in a second. For 3 years, they haven't grown it in a couple years at least. Buyback yield of 0.03%, so they're efficiently buying back shares. At least they're getting them when they're fairly valued, maybe not undervalued. Shareholder yield of 3.84%, nice to see positive there. They do pay out on the March, June, September, December timeframe, like most companies do. Now, going back in time here, February 25th, 2022, they were paying 60 cents in dividends per share. Jumped it up November 2022 to 66 cents per share, and they have not raised it since November 2022. That is where it's maintained and still remains since 2022. So for at least the last couple of years, they have not raised this dividend. So I don't know why it says growth of 3 years. That's wrong. But it still remains at 66 cents, and that's where unless they get this payout ratio under control, that's where I would expect it to remain, if not be lowered from there. All right, let's run through the screener here. Understand the business. That's where we start, right? They are a provider of makeup. All sorts of and different kinds of makeup that I'm not even aware women use, right? I know my wife goes in and she spends some time with my daughters and her putting on their makeup, so they have quite the makeup cabinets, I'll say. Understand the business. Check there. Growing free cash flow. No check there. We've been going backwards, going down in free cash flow over the last several years. Growing dividend. No, it's not growing, and it doesn't look like it should be growing it with such a high dividend yield. Payout ratio under 75%. No, smoking high. 244%. Way too high. Dividend yield theory actually says it's potentially undervalued. Buy below current cost basis. It is within 15% of a 52-week low, so check there. Return on invested capital, return on equity, both were under 10%, so no check there. Earnings per share growth is over 5%. 50% is what they're claiming, so that's very good. But 1, 2, 3, 4, this one does not make it onto my watch list. It does look like they are having some issues with free cash flow. Their revenue growth forecast looks pretty good. Their EPS growth forecast looks pretty good. But right now, it is not one that meets the metrics for me to add onto my watch list. Let me know what you think in the comment section down below. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Estee Lauder you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it in the comment section down below. I'll try to work it in the rotation on a day it pulls back. We'll see if it's presenting any value. And drop a comment. Let me know what you think of Estee Lauder. Is it in your portfolio? Is it one you're watching? Maybe you're one of the people who is selling right now and part of the downward pressure with that 22% drop on the day. Huge drop on the day. Let me know what you think in the comment section down below. Love to hear from you. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. And we'll see you in the next one. Now, remember, this is Thursday, so this will be the last one of the week. I do these video series, Stock Pick of the Day series, Monday through Thursday. So this will be the last one. But tune back in on Sunday for the portfolio update. You can see what I added to my portfolio this week. Well, I'm not a financial advisor. I'm definitely not your financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in educational and entertainment purposes. Investing involves risk and money should never invest. Any amount you're not comfortable losing, always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor. Yeah.